The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. We're having a little technical problem here, so there's going to be not quite the very best of audio from my end, but of course our engineers back at TFNN will do a great job, as always. And thanks for being here on this pre-Christmas session. And thank you, Tom and Steve, and just terrific shows. Let's go right to the numbers. The Dow's up 54 at 16,070, I believe. The S&P is at up 4.5 at 2,086. You've got the comp index up 19 at 47.85. This is interesting because gold is down once again, down 3 at 7. I can't see it exactly. Let me just struggle to see this. At 1370, comp is 1374. Let me just type it in here. Gosh, that's 1.5. Okay, gold is at 1174, down 350. And you've got, now this is going to be very interesting because bonds are down. The TLT is minus 59 at 122.96. I've got a peak D at 127.72. It made that H pattern I always talk about, lowercase h, failed at the left side support. It was yesterday. It didn't hold the support of 124 and 20 cents. Instead, it plunged through it, and today it's at 122.93. This is telling you that money is flowing from bonds to stocks at this particular time. And we've got the dollar, DXY at 89.98, down 9 cents. I think today the dollar makes peak C. That says we should make leg D in the next day, maybe in the next day or two. So there were a couple of calls that I wanted to look at during the show, and we will get to those in a moment about the TLT and it was about the. Let me check. I wrote it down quickly. Par Silver, IWM is the Russell 2000, IDB is the NASDAQ, iShares, Biotech sector, and the SMHs. First, we're going to go to Garo in California.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Sorry about that, but I think we've got everything set now. So we're on, and I'm off to. Let's just do a real quick review. The Dow is up 60 at 18,000, and not so easy to see. Not so. Let me do this. Yeah, I'm gonna do the right. Here we go. INDU, and while I'm doing that, I'll ask Gary if he wants to call back. So the Dow's at 18,084, up 60. The S&P, this is much better. S&P is up 486 at 2,087. The IWM is up right now. It's up, and it's also ex-dividend, I believe. So it's making a peak A at 119.88 right now. This is a fabulous breakout. The weekly chart is in leg C, so everything's looking good. The technicals say that the 120-minute chart suggests that there should be a little bit of a digestive move right here. Let's go on to a couple of things I want to look at here while we're waiting to see if Garo's back. So the bonds I was talking about before at 122.99, down 55.30 seconds. I think they will find some support in the 120 to 121 area. 122.30 is the 9-period exponential moving average in the weekly chart, and 121.90 is the 200-period moving average in the 120-minute chart. So I think we're close to some kind of support, but We've had a fantastic move in bonds. There is a digestive phase. It's gone to leg D in the weekly chart, gone to leg week in the monthly chart, gone to peak D in the day. We can expect some kind of a pullback. Dollar, as I said before, dollar's had a spectacular move. I think it's going to make a peak C today. And that's kind of important because it's walking the 9-period moving average in the weekly chart. It is really above well above the 200-period moving average in the monthly chart. Basically, what I'm looking at is support is in the 89.40 to 88.90 area on the short term, and resistance is close to the 90.30. Maybe 90.50 area. Now, while I'm looking at this, I want you to quickly go to the IBB. IBB had a spectacular move to the downside. That's very unusual, isn't it? Downside, but today it's having a great move to the upside. It's up 7.20 at 301.88. Everything about this chart says IBB should take a digestive phase, and it's begun it. It began already back in December. Wide trading range. I suspect the 290 to 285 area will be support in the shorter term. Resistance will be in the 304 to 306 area. Don't think it's going to go much higher than that. I think it's in real trouble, at least in this particular phase of its rally mode. There was SMHs. Now, this is a very interesting thing. The SMH is at this particular point at 55.57. And within that context, it is acting well, not great, but acting well. And the monthly chart, it has made a peak E/A. I suspect it's A at this point, but I'm not going to claim it to be anything other than E/A right now. Why? Because it's up in that up channel resistance area that I call the inside track. So we're going to be watching it closely. Now I've got a call. I've got Alex, I believe, from New York. Alex, you're there.
Yes, I am, Basil.
Good. How are you?
Okay. As a matter of fact, we have something in common. My son is in Brooklyn also.
Oh, isn't that good? Oh, okay. Well, I've got a son and a daughter, or the daughter will be leaving very soon. But at this particular point, yep, the family's here. That's great. So you'd like to look at?
ExxonMobil, but I just want to tell you, I usually call about IBB.
Right.
And I took some profits on Friday.
Okay, and you've had it for ages, and you've always been 100% correct because you've always said every single pullback, you are a buyer, not a seller. And this is the first time, really, that you're starting to take some profits?
Well, it reached a point where my original lot was a 4-bagger.
Oh, that is unbelievable. Fantastic. That is beautiful. Great to hear. So, I agree with you. I think that the IBB right now is going to do some struggling. I think there's still a couple of stocks, just a handful of stocks that still have upside potential. But the majority that I looked at are starting to show signs of wear. And you know what? In terms of the rotation of the market, it's fine that they have a pullback while others take the lead. So I think they've done exactly the right thing. So now we're looking at ExxonMobil, which is XOM is the symbol. 93.64 is the price right now, down 95 cents. Had a spectacular move. This is actually leg A. Let me just double check to see. It's 93.64 and 93.67. Yeah, this is leg A, probably a peak A today. It looks like it's trying for the 95.77, 200-period moving average in the daily chart. Now, what's really interesting about Exxon, it has just been, I'm going to pull this chart back so people can see this. This is the monthly chart. Here we go. Monthly chart of Exxon. Look at that beautiful. It just constantly walks the 9-period moving average, but this is the first time it's down. We've got a break coming up. Alex, can you hold?
Yes, I can.
I'll be right back with Alex and also with...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. Nadex. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tigers Editions Hour, and we're on with Alex in New York. And Alex, you were looking at Exxon. Do you have a position in Exxon?
Exxon is my largest individual stock holding.
Okay, now let me, I want to talk to you about it in terms of, I know that you like the very long term, and you always look at the long term as if every opportunity for a decline is a potential buying opportunity until you get to the point where you become tentative about the upside potential. Now, I'm looking at this, and I'm seeing that it made a peak F in the Chapman wave. It made a peak F top back in 2007, pulls back, and then just rallies a little higher to 96.12 to a peak G in May of 2008, and then it slides to 55.94 over the coming year and a half, 2 years, and at that point it starts a big rally, and it's now it's made a peak F once again at 104.76 with a 2-bar reversal. And what's really important about this is it's starting to travel underneath the 9-period moving average of 95.41. I'm looking at a monthly because I know that you like to look at the very long term. Well, this is the only concern I have about Exxon, because if it's got a dividend, The dividend is giving you maybe a 3 to 4% security factor, but a capital loss of 3 to 4 points is different to a dividend gain of 3 to 4%. As you know, I don't have to tell you that. But what's really needed from Exxon is that it starts to move very quickly to the 96s, and it's at 93.70 right now. Very nice candles. So retracement. Pullback in the monthly, but at this particular point it's had a very nice rally from the most recent slide. Now here's my issue. I don't want to be the person that says to you you're very, very good at taking these longer term positions, holding them through thick or thin, and then seeing them go to higher highs. Then Exxon has been one of those. It's just been the key to the oil integrators, one of the very best. And that says to me, all I must say to you is this is what I would look for because there could be a pullback, which would then suggest to me in the weekly chart that an M-shaped pattern is forming, number one. And number two, there's a much greater chance now of testing the 85 to 83 area than testing the 96 to 98 or 99 area. So is that okay?
Well, I can't add to my position. It's way too big. I would never add to the position. I sold back in 2008 some at 95, and then I sold some this summer at 102. But it's hardly made a dent in my position. My position is very big.
So you know what? I'm going to suggest to you two things. One is, if it's very big, then even taking off a little bit doesn't make all that much of a difference. What you really want to know is, am I looking at a situation where Exxon has made a top of significance in the monthly chart, not the weekly chart, but the monthly chart, and what would signal that I've got to take off more than a little bit? Because at this point, I could say to you, I would put a stop in on a small position at about 90, between 90.70 and 89.90, somewhere around there. I would say, hey, you start dropping below that. I want to take some off. But that's not the issue. So the issue is I'm going to draw a trend line, and I'm going to say to you, keeping it as simple as possible. Here's the trend line. We're at the trend line resistance. We tried to hit it yesterday. You want to see by the end of the month, by next week, you want to see that Exxon's acting well, and that it's trading up into the 96.20 is not a big deal. It's only less than 2 points away. It should be doing that. If the market is moving high, it should move with the market. If it's failing to do that, I'm going to suggest that we give it another week or so, and then call me, and let's look at it again either a week from today or the very beginning of January. Here's my reasoning. If it can survive all of December, that's just the next 3-4 sessions or whatever it is in December, without breaking under 92 to 91, it just holds very well. I would say that that's a good sign that it's probably going to go higher. And if it goes higher, that's going to improve the weekly so that it's got a much bigger comfort factor. I don't have a comfort factor yet, and I won't until it starts closing above the most recent high, and that high is 97.20. It really has to close above that. All of a sudden then, your weekly, your monthly are starting to improve, and that's what I want to see. But if in this next 2-week phase, Exxon shows weakness, I'll do something that I would normally not do. I would recommend to our long-term holder that you start to take a little bit more off. And I don't mean just a little bit, I mean maybe a third off. And I have to really think through that decision before I'm going to go that route. At this particular point, my levels are, I want to see 97s before 91s, making it as simple as possible. If it starts to get under that 91-ish area, I'm going to say, I think it's limited to the upside. You don't have to get out because the dividend's going to keep you secure. But if it starts to show weakness technically, and the MACD hasn't crossed positive in the weekly chart, that's going to suggest that it's made a pretty serious top at that peak F that was made back at the turn of July, I think it was. In July at 104.76. So I'm going to say to you, don't do anything just yet. Let's give it a little bit of time. My suspicion is I'm going to suggest taking more off. I don't want to change your position whatsoever. I need a lot more proof before I can do that. So I hope that helps you.
Yeah, that's when I sold, was in July. That I sold.
You did. Okay, so you see, you have a wonderful feeling for getting tops in Axon. You've had a wonderful feeling. I don't want to change that. You're the one. I should be asking you these questions, Alex. You're not me. I'm just saying on a purely technical basis, unless it can get to the 97 soon, I think it's going to start to make lower highs and lower lows in the monthly chart. And that kind of goes with what I'm looking at in oil, etc. So that's my suggestion. But don't do anything just yet. You and I probably get the right feeling to say, hey, now's the time to start lightening up a little more.
Well, have a great holiday, Basil. I really enjoy your show.
And you too, the best of everything. Thank you, and I always enjoy your calls because you are one of our long-term holders who gets positions and holds them very well. Thank you so much for calling, and have a great 2015, Alex.
Okay, goodbye.
Goodbye.
Basil.
Thank you. So now let's do this. We want to look at WLL, which is what Garo wanted to look at. Garo, all I'm going to say is that you probably have the position and you probably have already taken some profits off. WLL is Whiting Petroleum. Got it smashed from 95 right down to the most recent lows below 25. Right now it's at 34.21, a great percentage gain. Lousy if you're looking at lousy if you're still looking at the actual chart based on the daily, weekly, and monthly chart. Now, because the 120-minute chart is showing some strength, what I'm going to suggest, Garo, is keep this on your eye. I think that this is a tradable stock, but at some point, and it won't be long, it will be fairly soon, I think the real test will come, because if it closes under 30, upside is extremely limited. If it pulls back just to 32.5 over the next day or two, and next week starts to trade at 35.5 to 36, it says it's going towards the 37 to 39 area. Just keep it as a trade. So Garo, you're probably not in it right now, and if you are in it, wait for another turn. Wait for the low of this bar right here, 31. I don't really want to see it go to 31 from here. I would say 32.75 to 32.50. That's probably the area where you can trade it for another bounce to the upside. But you've got to keep a tight stop. So I hope that helps you. But looking out, I do not see the stock as going anywhere until it can form a base of some kind of substance. So I hope that helps you. Now I'm going to go back to the charts that we were looking at. Let me do this. We've got a couple of things going on here. One is the euro, EUR, USD, is trading at 1.21. If, in this particular instance, SCTV, let me just write that down. Okay. If the dollar continues high into leg D, we're going to be watching the 1.20s to see if the euro can find some kind of support to finally have a bounce. So with that said, I want to go, I think it was Daisy. Is that Daisy on the line?
Yes.
Daisy from where?
Denver.
Ah, Denver. Hi, Daisy. Thank you for calling. It's the first time you've called my show, right?
Under this name, yes.
Oh, okay. I was just going to say, I don't often get Daisies. All right. You'd like to look at?
Solar City.
Oh, SCTY. This is our friend Musk's company. He runs it. His cousin,
right.
I think, runs it. Is trading at 56.88. Now, do you have a position in this?
No, I did quite a while ago, and it tanked, and I got out of it before it hit this level, and it's been rising while the others have not. So I'm curious.
Now, I looked at this the other day, and I said to myself, I promised myself I would avoid the solar stocks for just one reason.
Right.
The oil has dropped so much that I don't really see the benefit of the stocks in the solar area, but there's a difference in Solar City, because I know that from where I live in Newton, Mass, we had people ringing the bell, and they had worked out a deal with the city that they would come around and do some testing. Of course, whatever they test, they're always going to find something to do, and that they would get the contract. And I said that when they have cities behind them, that makes them viable, because they have funding, because they wouldn't get it from natural, from the public if oil is pulling back. So I like the action of the stock for two reasons, only at this particular point. Do you have a position right now then? Did you get back in? Or
no, I was hoping to, and I thought, every time I do, I make a wrong choice.
You know what? I'm going to suggest two things. Number one is, when we had a stock that years ago we were very lucky to have gotten out. I can't remember why we got out. It just wasn't acting all that well. Athena Health Inc. And later that day, it just tanked. And Bush, I can't remember what his first name is, who lives in Boston, and this is a company that's based in Boston, Athena Health. They do electrical medical records. He came out and he made a statement which was contrary, or the statement turned out to contradict what the company was saying just a few days ago. And that has happened a couple of times. Now, whether it's an error or whatever it is, I said, I cannot trust this company. And we kept trying to short it after that, but we would take a tiny loss and then we'd be out of it. On occasion, we'd have a tiny gain. But the last time I decided we would get it, and we bought it the other day at 134, and today it's at 151. It hit 152. Now, the reason why I bring it up is that if you have a stock that has not treated you well, that you have it has a chip on its shoulder, because every time you come in it tries to bonk you on the nose, you have to really have fabulous technicals to be able to go psychologically against what's been going against you.
Well, I mean, it happens with most things that I try to buy.
Oh, okay. So then here's my suggestion. Two things are happening. One is, when did you look at this in the last few days that you said you wanted to buy it?
Oh, well, it was at the market lows, which I didn't get into anything at the market lows.
Okay, because it was a very quick turnaround, right?
Right.
Okay, so the next day you saw it rally. Did you say to yourself, oh, I've missed it, I'm going to wait for a pullback?
Yeah.
And then the next day you said, oh, I've missed it, I'm waiting for a pullback?
Yeah.
And the next day? And then the next day? And
I thought I would call you and ask.
See, now what I do with a stock like this, and I've tried to do it for my subscribers, we've kind of been, since I've changed my mentality about that type of thing, we've missed one, and that was buying the double or triple long the Dow. Every day we've missed it because it did not pull back. Exactly what you're talking about, but I did not do it with other stocks, and they've done beautifully. We've got 33%.
And I didn't get into any of them.
Got a bunch of really great gains because I said, I'm in. I didn't hesitate, but I missed it with that thinking in going along the Dow. So we're looking good. But I did not get the one, because I like to say that we are long the Dow, we are short the Dow, because that's what I follow all the time. However, this is what I'm going to recommend. Because this Solar City has now been up, it's up at 56.89 per dollar today already, and the target would be the 200-period moving average of 58. I'm going to make two suggestions. The first is, when you have this gut feeling and it starts to move, I'm going to talk about it when we get back, but I think it's really important because it's a lesson that took me years to learn, and even then it's very hard to do. So give me a second, there's a break coming up, and I'll talk about what I'm going to suggest you try to do next time. So hold on, can you do that?
Take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back, and we're back with Daisy in Denver. And Daisy's looking at SCTY, and I was said to her that when you miss a trade like this, I will discuss the kind of things that I've been doing, which have been working much better. And this is what I wanted to say. Daisy, what I would suggest is that I would even say to do it right this second, but I don't like the fact that it's been up for so strong at this particular point without a pullback, and that would say to me that I don't want to use you as some kind of experiment. But this is what I'm going to suggest. When you want to get into a stock and then suddenly it moves away from you, there's a real easy thing to do, and that is buy much less. Go into it and say, well, I've missed my best entry. If I was going to buy X amount, now I'm going to buy a third less, or only a third. And on the next pullback, I'll add another third because it's away from the price that I thought was good. So you see what I'm doing? I'm saying, okay, you can get away from me, but I'm coming for the ride, but I'll have to come for the ride with a smaller amount. Right. Because I want the same kind of stop percentage or point loss. So if I was going to have on a $56.92 stock, if I was going to have a 1.5 point loss, now I can say I'm going to get a smaller amount and I'll have a 1 3/4 point loss. I can afford to have the same kind of percentage. You have to work out that kind of detail. But this is what I'm thinking. So I'm going to make the suggestion that if it pulls back, SCTY, why do I like it? Because the pattern in the weekly chart has the H pattern. I'm kind of showing it now for those of you who are looking at Tiger TV. On the left is the daily. On the right, in the middle is the weekly. On the right is the monthly chart. Here is the 120, which is still in leg C. So I'm going to suggest that if it pulls back now, it's a little, I don't even want to get into it now unless I was just nibbling at 25 shares just to have my foot in the door. That's one way to do it because it gives you a good feeling for how it's acting intraday. But because of the weekly chart that has the same pattern that the Athena Health had, look, see that arch formation that held and now then made a cup formation in both the weekly and the monthly. Look at these two charts. Now look at the SCTY. It's very much the same pattern. And that says there's a good chance that it's going to try to test the high of 6109. But how does it do that? It first has to challenge that little bar there, which is this one here in the daily of 5770. So here's my recommendation. If it pulls back even 70 cents or $1 between now and Friday or Monday, you can start a position, but it must be much smaller. I would put my 1.5 to 2 point stop in. If it comes back a little bit more, but it's still acting very well, then maybe you can say I'll add just a little bit more, but you don't want it to break under 53.50. That's too deep a pullback. This has to be a fairly moderate 2%, something like that pullback. Why? Because the weekly chart has that pattern that says it could very well start to test the left side highs. So that's what I would do with it. And that's what you could have done earlier. But instead of saying, oh, I've missed it, you start a smaller position. And now you're in a smaller position. You say, oh, I wish I had a bigger position. That's better than saying, I've got no position. Does that make sense?
It sure does.
Okay, so we'll talk about it. Call me next week and let's see if you manage to do this kind of thinking now with some stocks that you're looking at and you still keep fairly tight stops. Look at the pattern. If you miss it, you just start a smaller position because it's a stock you did want to get, and look how nicely it's done. So you were correct. You were just a little bit nervous in implementing a plan, but I think that could become a plan for you. I hope that helps you.
It does.
Thank you. And season's greetings, folks. Stay tuned for Larry Percival to have a wonderful Christmas. Everyone is celebrating, and I will be back with the team on Wednesday. Thanks for being here, and thanks to my wonderful engineer for getting me back on track here at TFNN. Have a great evening.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.